Bitcoin's future, a bold move or a risky venture? In a bold move, Tokyo-based Metaplanet has taken a stand, raising an impressive $135 million to fuel its Bitcoin acquisitions. This comes amidst a turbulent market, with Saylor, the founder of Strategy, standing firm on his belief that corporations can weather significant crashes. Metaplanet's latest funding round is a testament to its commitment to digital asset accumulation. With a fixed dividend of 4.9% and a conversion price of 1,000 yen, the Japanese firm is doubling down on its Bitcoin strategy, despite trading below the value of its crypto holdings. The company's board approved the issuance of 23.61 million Class B preferred shares, targeting overseas institutional investors. This move is expected to generate net proceeds of approximately 20.41 billion yen, $130 million, with a payment date set for December 29, subject to shareholder approval. Mercury, a new chapter in Metaplanet's story. The newly branded Mercury preferred shares, an acronym for Metaplanet Convertible for Return and Yield, offer a unique combination of quarterly fixed dividends and the potential for equity upside through conversion rights into common stock. Each preferred share entitles holders to an annual dividend of 12 yen and 25 sen, 8 cents, distributed quarterly. The initial period ending December 31st will pay a reduced amount of 40 sen, $0.003 per share. The conversion price, set significantly above Metaplanet's November 19th closing price, alleviates immediate concerns about dilution. Representative Director Simon Jarovich emphasized that this structure aims to minimize dilution while expanding BTC holdings, calling it a new step in their Bitcoin Treasury strategy. Saylor's confidence amid volatility. Michael Saylor, in a recent CNBC interview, dismissed concerns about Bitcoin Treasury models. He boldly stated that Strategy can withstand an 80% to 90% drawdown and continue operations, highlighting the company's minimal leverage of just 1.15 times with debt extending for 4.5 years. Saylor compared Strategy's impressive 5-year performance to NVIDIA, asserting that no S&P stock has performed better over that period. However, Strategy faces potential exclusion from the MSCI USA and Nasdaq 100 indexes as providers reassess firms with digital asset-dominated balance sheets. J.P. Morgan analysts estimate that MSCI removal alone could trigger up to $2.8 billion in outflows from passive funds, with a decision expected by January 15th. The competitive landscape. Bitcoin Treasury sector. The Bitcoin Treasury sector is undergoing a significant shift, as described by Coinbase Research, entering a player versus player competitive phase. Currently, 26 out of 168 firms trade below their crypto reserves, with industry-wide premiums compressing from 3.76 times net asset value in April to the current 2.8 times. Metaplanet, in October, became the first major treasury company to consistently trade below its holdings, prompting a 75 billion yen share repurchase program backed by a $500 million credit facility. Strategy's aggressive accumulation. Despite headwinds, Strategy remains aggressive in its accumulation, acquiring 8,178 Bitcoin this week at $102,171 per coin, boosting its total holdings to 649,870 tokens. Saylor maintains his confidence in Bitcoin's long-term performance, describing it as digital capital for investors. He dismisses concerns about stablecoin growth crowding out Bitcoin's use case, confirming that Strategy is actively buying at current price levels. A strategic pivot for Metaplanet. For Metaplanet, this preferred share issuance represents a strategic shift towards diversified capital structures. The firm plans to initially limit preferred issuance to 25% of Bitcoin's net asset value to avoid excessive leverage, gradually building its performance track record and cultivating the preferred equity market for potential future listings. And this is the part most people miss, the controversial interpretation. While Metaplanet's move is bold, it also carries significant risk. With the Bitcoin market's volatility, this strategy could either pay off handsomely or lead to substantial losses. What do you think? Is Metaplanet's move a brilliant strategy or a risky gamble? Share your thoughts in the comments.